Ladies and gentlemen, welcome to the Maverick Mindset Radio Show. I am Adam Williams.
And I'm Ashley Muckenhop.
And this is the radio show for the dreamers and doers. It's for those who are willing to step into the arena.
Some call us the crazy ones, the misfits, the rebels, the troublemakers.
We don't accept the status quo. We leave the world better than we find it.
We approach each day with an enthusiasm unknown to mankind. We maintain a rational optimism about the future.
This is the Maverick Mindset Radio Show, brought to you by me, Adam Williams. That was the best fumbled over intro ever, because the line that you left out is where you say, I'm Ashley Muckenhop.
I'm like, what happened here?
So there was this pause where you're like, what do I say?
That's me.
And here we are. Show 54. We are nailing it.
Gosh,
I'm excited about this show. This is one that had to be done right now.
Yeah,
so
because it's a hot topic.
It's current events.
This
is gonna be a good one. So, what do we call this? The Trump.
It's a tongue twister.
All right, you can go ahead and say that title.
Yeah, because I did so well with our intro. Okay, current events: the Trump tax twist, cuts, tariffs, and controversy.
Oh, controversy's a little aggressive, but maybe it's actually made up. BS
it's
political
made up controversy. Yeah.
I'm going to call out a certain House of Representatives person from New York on this show today because he's ridiculous. They're all ridiculous.
You know what I was finding in the research of this is why there's controversy is because they pick certain lines to throw out there to make people...
And people eat it up hook, line, and sinker. Yeah. So here's what's happening. All right. We are headed towards a brick wall, and people don't realize that.
Yeah.
I don't think this is getting enough coverage. So we are going to talk about today the 389-page beginning of the big, beautiful bill that they want to that they want to pass, right? So Trump wants to address taxes and immigration and border security and probably funding endless wars. And he wants to get it all done in one bill. And I think there's a lot of strategic reasons for that, and then there's other people on both sides of the floor that are saying, let's piecemeal this. But I think it's easier to get. I think they're going to get it done in one, and they're going to throw so much garbage in there. This is 389 pages already. How many of those people voting on this and arguing about it and being quoted in the newspaper? How many of those do you think have actually read it? I'm going to go with 0.
Yeah, that's a lot.
Yeah, so that's what we're talking about today. Is there are now proposals to address taxes. That's what we're talking about today, the tax changes. We can talk about tariffs and some of the other stuff that's happening, but we now, after it seems like 4 years of campaigning and promises on the campaign trail, and now almost 5 months into this administration, we finally have something to sink our teeth into. Mm-hmm. Like there's actually a document that we can read and review. And this is really important because in 2017, they passed the Tax Cuts and Jobs Act, which was significant tax legislation. And I think we've all forgotten about it because then COVID happened. And a lot of the provisions in that bill expire on December 31st of this year. Mm-hmm. And the reality is, I don't care which side of the aisle you're on, this will increase taxes for most of Americans significantly.
And that's the part that people are missing. I didn't realize that because I was hearing all the stuff out there that this only benefits the high income areas.
Yeah, of course that's
But honestly, like,
we need to talk about where you get your news.
Like,
you should just listen to me.
Facebook.
Everybody should just listen to me. Shut off your television, shut off your social media, and tune into this show and this show only so that I can give you the unbiased and actually critically thought through perspective on this stuff. You're welcome, America. All right, so that's what we're doing today.
We're gonna be a monthly thing.
Yeah, current events is gonna be every week. Adam's opinion on everything, unbiased, objective opinion. All right, so that's what we're talking about today. Is these things expire at the end of the year. There is a rush to get something passed. Trump says he wants this thing on his desk by 4th of July.
No, they're trying to get it to him by Memorial Day, which I don't know if that'll happen.
I think that's their goal, to get something together. But he wants to, so it's got to get through the House and the Senate. And there's going to be all kinds of fighting. They're earning their paychecks right now, allegedly. He wants this thing on 4th of July. I can only imagine, because he's going to sign it with fireworks going off and bald eagles flying by.
A big
it's going to be
production.
It's going to look like the movie Idiocracy, but whatever. So that's what we're talking about today. We're going to dig into some of the stuff that's going to change and some of the things that they're trying to keep in place because, again, taxes are going to go up. And I've been given
If
this.
it isn't signed, correct?
Right.
Okay.
If nothing happens, if the Tax Cuts and Jobs Act provisions expire at the end of the year, it's going to have a real impact on people's paychecks and
Because
tax
it's going
refunds.
up significantly. It's not like a little.
It depends on your definition of significant, but yeah, for a typical W-2 earner who's making less than $400,000 a year, yeah, it's real impact. For those of us who may be making more, who may be running businesses, there's a lot of opportunities that are going to come out of this.
Yep.
And that's the key is within this 389 pages, there's landmines and there's treasure chests.
Yeah.
And I'm here to tell you where they are. The other interesting thing is just about everybody has admitted this 389 pages is incomplete. There's more that they're going to put in here. There's more that has to be negotiated. But finally, we have some sort of proposal in front of us that it serves as a starting point. So this thing came out Friday night. And late Friday night. And of course, Democrats accuse they're doing this under the cover of darkness because it only benefits the rich, which
But that's not true. Yeah.
whatever. Well, but that's enough people are going to take that at face value, and that's fine. So it came out Friday, and then I want to say it was Monday. The House Ways and Means Committee chimed in and added some stuff to it, and has provided some more guidance. And they're fighting this thing right now. Like it's going through different committees and things like that. So that's what we're going over today. But before we jump into it, now 10 minutes into the show, let's give our typical intro where everybody can find out more information. This is going to be a show that you're going to want to share because there's going to be really valuable information in here, presenting it in a, I don't even want to say it's unbiased. It is biased, but not left or right, just in general anti-government and anti-tax. So tune in
Just
for
in
this.
that way.
Yeah. So of course we're streaming live on Facebook. Maverick Mindset Radio is the page going live every Wednesday at 9. No, blowing your minds every Wednesday at 9, going live at 9:05.
Messed it up too.
We got the episodes up on Spotify. We're on YouTube. We're streaming live on YouTube as well. And then, of course, MaverickMindsetRadio.com for more information. So let me lay some foundation here. All right. So 2017, they passed the Tax Cuts and Jobs Act.
Yes.
And this did a whole bunch of things, like lowering certain tax rates for a lot of people, even the lowest tax rates, the 12% down to 10%. And
like
whatever.
10% stayed. 15% went down to 12. 25% went down to 22.
I'm glad you listened.
You said research.
That's a rounding error for me. But yeah, so tax rates, marginal tax rates went down, as well as the size of those brackets increased. So the higher rates didn't kick in until you were making even more money.
So everyone benefited.
Yeah. So well, a lot of people did. So that is going to change. We've been talking really since 2017, quite a bit about bonus depreciation. And this is the concept where if you went out and bought a vehicle, for example, in your business, there were ways to write off 100% of that vehicle in the year that you purchase it versus writing it off over 5 years or 7 years. I think it's 5 years, whatever. So really, it created an incentive for people to invest, not just in vehicles, but in machinery and equipment and other things like that. So for several years, you could write off 100%. It's gone down over the last couple of years. Right now, this year, as it sits in 2025, you can write off 40%. Okay. But if you buy $1 million piece of equipment or airplane or whatever, you can still 40% of it isn't bad. That's still better than the typical depreciation rules. But that is going to go back to like the normal depreciation schedules.
Or
so
go back up to 100?
No. If nothing
lower?
changes, if nothing changes, basically bonus depreciation goes away. So
see, that's not good.
No. So as an example, one of the things that we do right now with a lot of our real estate investor clients, whether it's their full-time gig or they have some real estate investments on the side, is we do what's called a cost segregation study. So you buy a piece of investment property, and it's different for commercial or industrial, residential or industrial property. But if you buy a regular residential rental, you can typically depreciate that over 27 and a half years. So nice. You get a couple percentage every year that you can write off. But with bonus depreciation, we would do this thing called the cost segregation study. And we'd say, okay, this isn't all 27 and a half year property. Some of this can be written off in 10 years or 7 years or 5 years.
So you're being able to do it sooner.
Or some of it can be written off right now. So if you made $1 million investment in a piece of property, typically you could write off, I don't know, $70,000 or $80,000 of that in 1 year. Actually, it's less than that. But with a cost segregation study, you could get substantial tax benefits, like potentially hundreds of thousands of dollars in that first year. So you put money into a property, but immediately
Can take it back out instead of waiting.
Yeah, so that's set to expire. Like I said, the tax rates and the tax brackets are going to go back to their old levels, which are higher for most people. And there's also, this is an interesting one for me because there's what's called the SALT cap.
I had no idea what that was, and I'm like, I was going to ask you, explain to me what that.
Well, I'm glad you asked, Ashley.
Yeah. Well.
So in most states, well, in all states, typically when you pay your state income taxes, you used to be able to deduct that from your federal taxes. So if I paid $20,000 of tax to the state of Pennsylvania, I could reduce my federal income by that $20,000.
By what you paid to the state.
So that may save me, if I'm taxed at 30%, that may save me $6,000 that year, right? And then when they passed these cuts and they need to make these things like sort of revenue neutral or make the deficit not grow that much. So they put a cap and they said, well, you can only deduct $10,000 of the state and local taxes that you pay.
Oh, you can do the whole thing.
Right.
Okay.
So that was a way to cut tax. That actually affects higher income people, right?
Yeah.
Like I tend to pay more taxes than you because I make more money than you. So if I can deduct fewer of those taxes, that's problematic for me. So they put this $10,000 cap in place. And that really affects especially the higher income tax states. If you live in Florida, this doesn't matter. You don't pay state income tax. You live in New York or Illinois or California or New Jersey or name your blue state where the tax rates are a lot higher. Yeah, it's a real impact there. And that cap might actually go away, but it's part of the negotiations of what they have going on here. So we're going to talk about, those are the expiring provisions. So proposal number 1 in this bill is that they're going to extend those things, right? They're going to extend the lower tax rates. They're going to extend the larger tax brackets. They want to extend the SALT cap. They want to bring back bonus depreciation, right? So basically bring back the Tax Cuts and Jobs Act stuff, which is nice.
And this makes it like law, right?
Like putting it... And this is, so part of what they have to do, this is the crazy thing on this, is the current bill, this 389 page, which they actually call in all capital letters, the big beautiful bill.
It's funny.
It's embarrassing. It's not funny. It's embarrassing. This is the state of our country right now.
I know. Who named it that?
Oh, I'll give you one guess, and his initials are DJT.
This is what I want out. This is what it's going to be labeled.
Yeah, I should pull up the copy of the bill because there's a couple other things in there that's like, it's so clear that this was written by the marketing department and not by people who actually understand how laws work. But, they are appealing to the lowest common denominator in America oftentimes, so they need to dumb it down as much as possible to the 50% of the people that are below average. So that was insulting, but I don't know. So
no apologies here.
So right now they've got this bill sitting out there. We know it's incomplete, but let's go through some of the stuff that's in there because this is important for everybody. Doesn't matter if you make $40,000 a year or $4 million a year. This stuff is going to have an impact on you. None of this is law yet.
Correct.
Right?
Yep.
But it's still important to understand how this works because we're almost halfway through the year. And if some of these things take effect or they're retroactive, you're going to have, if he signs it July 4th, 5 months to figure this stuff out and put it in place. So it's worth spending time on this. And I've been giving this a lot of thought recently, too, because I realized that from 2020 until now is when our business saw the most growth.
Yes.
Right? I mean, we've really taken off in the last 5 years. And it seems like the 10 years before that were such a waste. No, we learned a lot. But what I realized is when all the new stuff was coming out through the pandemic, the new programs, the new laws, all that, like whether it was federal stuff or state stuff or local stuff with shutdown orders or incentives that they created, I realized that the reason our business was successful is because I bothered to go and learn all of this stuff. Yeah. And then I could teach it to our clients and help them with things. This is the most significant tax legislation that we've seen, at least since 2017, and it may be more impactful than that, depending on some of the stuff that they throw in here. So
you want to understand it because it's going to impact our clients, especially working with business owners.
This is a huge opportunity for me.
Yeah,
that's it, right?
Yep.
So I can get on a radio show or a podcast and I can teach this stuff to people and sound really smart. And
it's a big, beautiful opportunity. Ba-dum-bum.
I'm leaving. I'm leaving. Unlock the door. The show is yours. That's actually pretty good.
Thanks.
I'm gonna use it. when we actually are spending the rest of today doing marketing.
Yeah.
And that is going to be one of our projects.
Yeah.
Is capitalizing on the big beautiful opportunity. Goodness gracious. All right, so let's start with these are in no particular order.
Okay.
I'm just throwing these things out here. And again, some of this stuff is in this proposed bill. Some of the stuff that we're going to talk about is merely Trump like tweeting about it, but it's enough that it gets people talking about it. So we'll.
Of course.
He of course thinks that has the effect of law, but this is exhausting. Wait, did we bring any beer for this show? All right, so I'm on 75 hard. I think I'm on day 14. I am on day 14 right now. So
this may break you.
This is it. This is it. No other attempt. Just the discouragement of having to live with this stuff. All right, so item number 1.
Okay.
They want to increase the standard deduction.
Okay. Explain that.
Gladly.
Okay.
So there's 2 ways that you can take deductions on your taxes. So when you show your income, and I'm talking on your personal taxes.
Okay.
This is not business deductions are a different story, but on your personal taxes, you can write off certain things, right? If you incurred expenses in our business that we didn't reimburse you for, or if you spend enough money on medical expenses, you can deduct those, you can deduct charitable contributions, etc.
Okay.
But for the average person who doesn't have like an accounting team and a bookkeeping team, that would be a lot of work to track all of that stuff. So they give you what's called the standard deduction, and they say, hey, rather than tracking all that, or even if you do track all of that, you can just deduct from your income. This year it's $15,000.
Okay.
So you can take 15 grand off the top of your taxes. This is the strategy where when you put your kids on payroll, you pay them under $15,000.
Okay.
Because then they take the standard deduction and their taxable income becomes zero, basically. So the current standard deduction is $15,000. They want to increase that by $1,000
To 16.
to 16. So let's do the math. If you're in a 20% tax bracket and they just took $1,000 deduction that they gave to you, you're going to save $200 on that, right?
Okay.
Not a ton of money, but whatever, it's $200.
savings, yeah.
If you're taxed at 10%, it's $100, or 12%, it's $120, or if you're taxed at 30%, that's $300. So that's money,
So
right?
it's savings. It's a beneficial.
It's a couple $100 reduction on your taxes by changing that standard deduction.
Okay.
Fine. If you're married and you file jointly, it'll be $2,000. So right now it's $30,000. It would go to $32,000. So that wouldn't be taxable. So they want to make that change, and that helps everybody who pays taxes.
Yeah.
Right. Or everybody who's right on the cusp of that standard deduction. Doesn't matter if you're rich or poor. Actually, I think it helps you. If you're lower income, I think this has a bigger impact, because higher income, we tend to focus on itemizing our deductions and actually writing off all of that stuff because the numbers are more significant. And if you're making $1 million, chances are you've done things, even charitable contributions, that are beyond that standard deduction, right? So they're proposing that change of changing the standard deduction, and I believe they want to make that permanent, which right now again. That the current increase number, it adjusts for inflation, which is why it's $15,000 this year, but it may go away, or it may be reduced. So they want to increase that. So that helps just about everybody, and frankly, disproportionately, it helps lower income people. Okay.
So cheer that, everyone.
Not everyone. I don't care.
There's a benefit.
The amount of time that I spent just talking about that cost me $120. Okay, so second thing they want to do is they want to increase the maximum child tax credit amount.
Okay, so what is it now? 2 or
2,000.
2.
So
Okay.
they want to take it to 2,500.
Okay.
So that's a credit. So an increase of a tax credit of $500 is a direct reduction to your tax bill of $500, and it's refundable, so you can get that money back.
Yep.
So if you left, let's assume it was just those 2 things. They increase the standard deduction, they increase the child tax credit. If you're at a 12% tax rate, you're going to save $120 because of the standard deduction. You're going to save $500 on your taxes because of that tax credit. That's $620.
Yeah.
You would not be sad if someone handed you $620
I would
right now.
not.
But one of 2 things is going to happen here. And there's a reason that they're including this now is because next
Is
year...
there a catch?
Not really. It's just you got to understand the game that they're playing,
Okay.
right? You have to understand why they're doing these things. One of two things could happen. One is you could change how much tax you have withheld from your paycheck every week or 2 weeks or every month, however often you get paid, and the amount of your paycheck could go up. Mm-hmm. Or what's more likely to happen is most people are going to ignore what gets withheld from the paycheck because they don't understand how it works. And then next year, when they file their taxes, their refund will be bigger. And that's what the Republicans are hoping for, is because when there's midterm elections next year, they could say, hey,
I get
we
it.
got you an early win from this.
There's an end game to
yeah,
this.
your tax refund went up because of the work that we did.
Got it.
Vote for us.
Got it.
You're welcome for giving you more of your money back.
Yeah.
Right?
Yeah.
So that's the play. And I think
Okay.
I think that's why a lot of articles that you read about this start off with that, because that actually has broad impact.
Mm-hmm.
And the Republicans could call that a win because they're increasing the size of your paycheck, or they're increasing the size of your tax refund, which I don't know anybody that really complains about that. So that's it.
Okay.
Along with the standard deduction and along with the child tax credit, they also want to adjust the tax brackets.
Yes.
So the higher income tax rate won't kick in until you make more money. Mm-hmm. So that would be that's a change that they're proposing in 2026, which means starting in January, you would actually have less tax withheld from your paycheck. So we hit January or February or March or April, whenever you file your taxes, your refund goes up. So they count that as a win. And then the amount of your paycheck actually increases because they adjust the tax brackets, so they can make the claim that they're putting more money in your pocket. The reality is they're letting you keep more of the money that you earn. But that's they'll be able to carry that momentum, they think, into midterm elections and have some broader appeal with it.
Got it.
Does that make sense?
Yep.
Did I explain that clearly enough?
That actually makes more sense than when I read it. So
Great. Then let's
thank
talk
you.
about the bad news.
Is this where the spending? Bad news goes?
How'd you know I was going to go there? So we're going to go over some of the other tax savings things they're going to throw in here. But either somebody smarter than me or someone who's really pulling the wool over a lot of people's eyes, probably a group of people who are overcompensated, have done the math and said this will reduce federal revenue by $4.9 trillion over 10 years. So, hey, Americans, you've got more money in your pocket. Great. The government now has $4.9 trillion over 10 years less to play with.
So they got to make it up somewhere.
Well, they got to make it up or they got to cut spending. And that's where a lot of the fighting is going to happen.
Yeah. So it's
right
not
now.
necessarily the tax stuff. It's the cutting. It's the spending that is where
spending's always the problem.
Going to
spending
impact
is
people.
Always the problem. And that's where a lot of fighting has happened. And we're going to talk through that. But this 10-year time horizon is important because that's how they calculate these things, and that's how they look at these things. That's part of the reason why the Tax Cuts and Jobs Act had so many provisions that expire. Because if you make tax cuts permanent, that math increases of the revenue reduction. But when you let them expire, there's some fuzzy math that they do that like, oh, it's not that big of a deal because these tax cuts weren't permanent and they were temporary. So we're looking at less revenue to the tune of trillions of dollars a year over the next 10 years. Really, really exciting stuff. Just an embarrassing number, but whatever. Okay. The current bill, I've seen mixed information on this, and frankly haven't read far enough into it to see, but we talked about there's things that are missing from this bill. There's things that politicians and Americans want to have in here that haven't been addressed yet.
Yep.
So the initial proposal on Friday left out that SALT cap. It didn't address the SALT cap.
Really?
So right now it's
Okay.
10,000. It was out on Friday. I think the conversation right now, and this may have come out of Ways and Means on Monday, is they wanted to make the cap $30,000.
That's the information I got.
I got to find this quote because I'm so angry at this guy for completely unreasonable reasons. So this is let me find it. I'm not even going to cite the source on this because it's not even worth it. But so the SALT cap deduction, ideally they would eliminate the deduction, right? Then you can deduct all of the state taxes that you pay. But there's a politician from New York that when they said, oh, we're going to make it a $30,000 deduction or $60,000 if you're married filing jointly. And this guy from New York said, it's still a hell no. This is the same guy who said these tax cuts only benefit the rich.
Okay.
So you got
that guy.
but the SALT cap benefits the rich,
Yeah.
right? So if you
Yeah.
want to, if you can't simultaneously say I want this SALT cap eliminated,
Yeah.
and say this only benefits the rich, because I'm not going to say poor people. I'm going to say low income people don't care about the SALT cap. They don't pay that much
Correct.
in state and local tax. So they're talking about phasing out the SALT cap, that $30,000 number, that limit that you can deduct. They're talking about phasing it out if you make over $400,000 a year. And this guy's saying, no, you can't do that. It's like, okay, but $400,000 a year, no matter where you live, is above average income. That's moderate to high income, pretty much regardless of your geographic location. So you can't simultaneously say it only benefits the rich and then say, well, this provision is unacceptable, that like on its face only benefits the rich. So this is the problem with politicians, is you really got to dig into what they're actually trying to say here. All right, second thing that I think is really interesting, and this is a broader thought exercise for me that I need to get in touch with somebody who understands this stuff better than I do. But I think it was 2022, I think it was part of the Inflation Reduction Act, which is so ironic because it did not reduce inflation. But hey, we called it that, probably in capital letters on the top of the bill. They are going to eliminate or significantly reduce tax credits for clean energy investments. Yeah. So if you build solar panels or batteries or invest in solar equipment, there are a lot of tax credits available for that. This is really interesting to me because I started looking at some of the numbers last night, and I don't remember if it was the Wall Street Journal or the New York Times, but they had this map of America that showed all of the investments into clean energy since this law was passed in 2022.
Yeah.
And they cited all these politicians, including some local ones, that came out and announced these massive investments in their territories. What's it called? Districts, whatever. I'm glad Joel is here to fact check me. He knows the actual words I want to use. So they come out and announce hundreds of millions and billions of dollars of investments in all of these projects in clean energy. Mm-hmm. Since 2022, they've deployed less than a third of that money. So they've talked a big game and said the clean energy credits are doing all of this, and we're going to build these lithium-ion battery plants and solar panel manufacturing facilities.
But it hasn't happened?
None of it's happened. Some of it's happened. A small portion of it has happened.
So they're saying we're going to take the spending away then.
Well, yeah. First
it.
of all, there's just an energy policy thing going out there with the Trump administration that I don't really understand. But it's been so slow moving, and I get that these are large investments. I think this is one of the things that's driving people crazy about Donald Trump is whether you like him or not, you have to admit he's moving faster than any president in history has moved across the board, in every department, in every... Go ahead.
Do you think that's because of his business background? Because you just can't sit on your butt in business. You got to keep moving.
Well, he didn't do it in his first term.
Right. Okay.
I think what he realized is this is how he did business. He plays fast and loose, right? He didn't do it in his first administration because even though he wanted to drain the swamp, he didn't fully drain the swamp. And there were still a lot of lifetime politicians in there and people who were used to doing things a certain way that slowed him down. I think he comes in this term and realizes,
just forget it.
Nope, you're all gone.
Yeah.
Yeah. And I'm not saying this as a good thing. I'm saying this as a fact that he's put more of his people in there and they're moving faster than anybody can keep up with. And a lot of it's crap. A lot of it's garbage. Some of the stuff that he's doing with these law firms and all these executive orders, it's so much to keep up with. But he's using that to his advantage because people can't keep up with him. So on the one hand, you have a law that was passed 3 years ago where it's not really even taken effect and we're not really even seeing the benefits. And there's announcements of projects, but until the shovel hits the ground and the checks start getting cashed, none of that even matters. And now he's going to pull away that tax incentive and they're worried they're going to lose all this money. I question whether the money and investment ever even existed to begin with. So I think that's really interesting. There's something political here and policy wise that I don't completely understand. I think, I don't know. I'm so libertarian on this stuff that like part of me says just stay the heck out of it.
Right.
On the other hand, we know that tax policy exists to create incentives and disincentives. And if you want to incentivize investments in clean energy, then you want to offer tax credits and incentives for that. So he's basically taking the position that I'm not interested in incentivizing investment and growth in clean energy. And I'm not so sure that's a good thing.
Yeah.
But I don't know. I don't know what the answer is
Yeah.
on that, admittedly. I'm here to look at the facts and the reality of what's actually going to change and how we can respond to that. And, you know, if it's taken you 3 years to get a project shovel ready and start making investments, you know,
And-
shame on you.
Yeah.
I mean, you can do a lot. I'm looking out the window of our studio and seeing what's been done in 3 years in Erie, Pennsylvania, and saying, gosh, if we can do it here,
Yeah.
which we tend to move it at
You can do it anywhere.
the speed of molasses, then it can happen with other things. All right. One other thing that I think is really interesting, and again, this is back to Trump tweeting and thinking it has the full effect of law. He threw out the idea of raising the highest tax rate by a couple of percent.
Okay.
Or maybe it was even creating a new bracket. But basically, if you made over like $2.5 million a year, they were going to tack a couple extra percentage points
Yeah.
on there. He tweeted this. He threw the idea out there. It's not in the proposed bill. Nobody's really talking about it. I think this is another example of something maybe that he's throwing out there as a threat. He makes a lot of threats. I don't know if they're empty or not.
Right.
So he threw this idea out there, and I think it's going to come back into the conversations that if you're making over $2.5 million, you could see that highest bracket go up by another 2.5%. So that could be a big revenue raiser, because if you're, I mean, that we're talking about the 1%ers here, and a couple percentage points on their income can be really significant from a revenue perspective. But on the other hand, we all know that there's games that you can play or laws that you can follow to show an income lower than that under certain circumstances.
Okay.
So who knows what's going to happen with that, but I think there's going to be more conversation around it. I think that's an easier win for Republicans to say, no, this doesn't only benefit the rich, because look what we just did to the rich, right? We increased their taxes, but there's enough other stuff in here that
It's insignificant.
the net effect may not be that real. So, all right, so those are some of the things that are in the bill or not in the bill. Another one that's really interesting to me is the qualified business interest deduction, QBID.
What is that?
I don't know. No. So for small
Like Salt, Cupid, come on.
QBID, QBID. So Cupid would be funny though. Yeah, I'm glad you prepared for that one. So this was new as part of the Tax Cuts and Jobs Act, that basically if you own a business properly set up, we talk about entity selection and all these things, but if you own a business that's got the proper tax elections in place, you can take the first 20% of your income and exclude it from your taxes.
Oh,
so it's kind of like the standard deduction for your business. If you made $100,000, you're only going to be taxed on 80,000 of that. It was kind of nice. Now there were phase outs and there were exemptions. So like doctors, lawyers, dentists, I think probably even accountants, in their professions, the QBID threshold was lower, and there were phase outs for it. So if you made $1 million as an attorney, you wouldn't be able to take 200,000 off the top of that. But for a lot of other businesses, that was actually possible. And this was a fun tool to have in our tool belt, because again, we can move income around and we can shift income around in a legal way to bring you below that threshold, so you still qualify for QBID. Yeah. They're talking about increasing that from 20% to 22%. So taking another 2% of your income out of your taxable income. That's nice. I think that's a great incentive for small business owners. I think with exceptions and phase outs and things like that, you got to know your numbers and you got to know how your business operates, and you got to work with a professional to understand this stuff. But that's a proposal that's out there that does impact small businesses. And I was thinking about this on the drive-in this morning. Like, when you talk to business owners about working with us for their tax strategy, do you ask them, hey, if we saved you $40,000 or $50,000, what would you do with that money?
Yeah, it's like, if you had just, like you said, $40,000 or $50,000 at the end of the year, what would you do with it?
Yeah.
Would you go on vacation, invest it in something? The thing is that you can do anything with it.
But what do they say? What are the answers that you get?
You know what? A lot of them they're like, I didn't think about that. I don't know.
Oh.
They don't think, because it's not a thing to them to say, I could have this extra money. So I've never thought about that I would potentially be able to have this and do something with it.
That's interesting. I mean, I don't know, if I grew my business and made an extra $50,000, what would I do with it? And I think for most of the business owners that I talk to, by the time they get to me, or if I'm friends with them or in different masterminds and things with them, the reality is they're usually going to put that money back in their business.
Yeah.
They're going to hire somebody or invest in marketing or find some way to continue to grow and make more money and pay more taxes. So I think that's a nice one if they're going to increase the QBID, the qualified business income deduction, and lower tax bill for small business owners. The reality is that probably means more investment back into small businesses, as we know they love to do. Okay, another provision in the big beautiful bill, which we're diving deep into this 300.
BBB.
Oh my, stop it! All right, the first one was good. The second one was strike 3, even though I skipped one there. So
it's one of them days.
they want to. There's a cap right now on what's called mortgage interest deduction. So like you buy a house, you take out a mortgage, and you pay interest on that mortgage. Have you looked at your amortization schedule to see how much interest you pay on your mortgage?
I have not.
It's it'll depress you. It's absurd, right? If you spread out a home payment over 30 years, you're probably paying 80 or 90% interest or more in these first couple of years. So you pay a lot of interest to your bank, and you're allowed to take that as a deduction on your taxes. But there's a cap. So if your mortgage is over $750,000, you can't take that deduction. They want to leave that in place.
Okay.
Which again, who does this help or hurt? This tends to hurt higher income people that go out and buy $1 million house and maybe take out an $800,000 loan, or buy a $10 million house and have a $5 million loan.
Yeah.
They can't deduct that interest on their taxes. So they want to leave that cap in place. This is another, hot topic when you're talking about high income states. They tend to have, I think, higher home values, which means larger mortgages. So there's a lot of moving pieces on this, right? And I think a lot of people want to focus on one element of the bill and say it's the worst ever. But you really have to consider the overall impact on this. And that's the part that I think is a shame, is it's really so overly complex that for everybody's specific situation, the total impact of this bill, you're adding here, you're subtracting here, and you got to see where it all shakes out in the end. And that can be a complex and overwhelming amount of math. But like I said, if none of this gets passed and the Tax Cuts and Jobs Act provisions expire at the end of this year, most people's taxes are going up.
Yeah.
So that's the net result there. Okay. 2 other things that I am actually kind of surprised made it in the bill, and this is going to create some really interesting opportunities, is Trump has talked about not taxing tips and overtime.
Yeah.
And it's in there. They threw this idea out there, which is really interesting. Of course, they've put some guardrails around it, and I'm sure there's going to be even more. But if you earn tips as income, they will not be taxed as long as your income is under $150,000. So if you're a server, even at a really fancy high-end restaurant, most of your income comes through tips. And even if you're making 6 figures, which there are servers out there that make 6 figures,
some places,
you wouldn't pay taxes on those tips, which is wild.
Wow.
Yeah, except guess what's going to happen? You think tipping is out of control right now.
Yeah.
That I think there's going to be a lot of opportunity to try and squeeze more tips out of people. You're going to start doing that. You're going to sell somebody a tax plan and then say, yeah, you want to throw 20% on top of that?
Don't forget who got you.
Yeah,
there.
that's my tax planning. Yes. So that's out there, and I think that's really interesting. And the same thing with overtime. Your overtime won't be taxed. This creates such a level of complexity for, I think, it's probably going to have to show up like on your W-2 that you get at the beginning of every year, separating your overtime or your taxed income from your ordinary income. And if you make under 150 grand and you're working overtime, that won't be taxed. So I think that's really interesting. I know a lot of, especially blue collar folks that work a lot of overtime, make a lot of money on overtime, who wouldn't pay tax on that. I think back to when I was in high school and I worked at the produce company. The base wage there was very low, but it's because they let you work 60 hours a week. So by the time you tack on 20 hours of overtime, that's why most of those guys were there at 4 o'clock in the morning sorting rotten tomatoes. That was really a formative job for me. But yeah, I made a ton of money on overtime, and I made enough. I was, 18, 19, 20 years old, and definitely paid a lot of taxes on that. So that's money that I could have blown on.
And this is in the
bill.
This is
it's in there. Yeah,
nice.
They've actually included that, which I think is really interesting.
That's good.
So I think it's I don't know if it's good or bad. It's definitely good for the people that see the benefits of that.
Yeah.
But the more crap that they throw in here, the more compliance that you have to worry about. I don't even remember what we were talking about yesterday, but Chrissy brought up something on a meeting that was like, oh, that's like really unfair to business owners. I don't even remember what it was, but I'm like, Chrissy, it was the threat of somebody leaving a 1-star review. right?
Yes, yes.
You deliver on everything that you have to deliver on. The client's expectations were never going to be met, and they threaten a 1-star review, and that's really unfair. And I'm like, if I made a list of the 500 most unfair things to business owners, that would be lower on the. I mean, it's on the list, but that would be low on the list. So now we're going to have new compliance stuff for business owners. That when I send you your W-2 at the beginning of every year and you go file your taxes, I've now got to make sure that that's accurate. Because if I accidentally put $10,000 of tip income under your ordinary income and you're paying tax on that versus not, like that's significant money, and it's one more hoop for me to jump through. And I think that's the like I said a couple of minutes ago, there's so much complexity at this. There's so many variables at play that now we got to go and learn all this new stuff and make all these new changes. And for me, it's an administrative nightmare. Fortunately, we own a tax business, and that part of it makes it easier.
Helpful,
but for most business owners that can't walk into their own tax firm every single day, this is a lot of crap. They're gonna have
questions.
They're gonna have a lot of questions, a lot of misunderstandings, and if they're not thinking about this stuff now and how it's going to impact their business, they're gonna miss out. So let's think about that. Let's talk about recruiting.
Yeah.
If you're a business that pays a lot of overtime or your employees earn a lot of tips, it's going to be pretty easy. If you're thinking about how to make this work in your business right now, you can go out and poach a whole bunch of employees.
Yeah.
Not that servers make a ton of money, right? In Pennsylvania, it's like $2.35 an hour or something like that. I don't know many servers who make that little as a base rate. But if you're in a business, if you're in a higher end restaurant where the tips tend to be higher anyway, now you're able to keep more of that because it's not being taxed. I mean, the differential between those two businesses is so significant now. So that's part of the reason why, even though this hasn't been passed, this is the type of thing where you go for a drive or you go for a walk and you stare out the window and you just think, all right, well, how can I find an opportunity in this in my business?
Yeah.
Right. And I think these are really really important ones. All right, another proposal that they're throwing in there, this isn't really income tax related, but the estate tax. So historically, when you die, the government takes a big chunk of what you're worth.
Really?
Yeah, like 40, 50% in some cases.
I didn't know that.
Well, because they've created an exemption from it. So, I mean, even when I was getting out of law school, it was only $1 million. Like, if you were worth less than $1 million, they didn't touch it. But if you were over $1 million,
they got to take some of that.
A huge chunk.
Why? I don't
get
it.
Because you're dead and there's nothing you can do about it.
But can't that go to somebody?
Yeah, it should go to your family. It should be yours to keep, but not in certain people's opinions.
So you got to plan for that ahead of time and be like, hey, just so you know, you're really not getting 40%.
That's why you hear a lot about estate planning and asset protection.
So
and all those things.
That's the whole thing behind it. Okay.
That's why you see a lot of people. Imagine if you were worth $100 million and you're 80 years old, you're going to donate a lot of that, even if you give it to your own foundation.
Yeah.
So your family can continue to control it versus the government comes in and takes half and your family fights over what's left. So, but there's an exemption. The current exemption is 13.6 million. So it's a small percentage of people or estates that exist over that number. So there aren't many that are taxed. They want to bump that up to 15 million. So if you're worth less than 15 million when you die,
you're good.
You don't have to worry about estate tax. You still got inheritance tax in different states, but they want to bump that limit up. So that's one of the arguments that, it's only helping the wealthy. Because if you're worth $15 million, that puts you in a rare category in America. But again, this is a tough one because when you're doing estate planning, tax planning for your inheritance and your estate, these numbers change frequently. They adjust for inflation, and as the stock market changes or real estate portfolios change, this is something that you need to keep an eye on. So if you're worth right now $10 million and you got 15 years to live, this could really impact you as your portfolio continues to grow. So it's worth doing some planning and worth knowing about this, because we also know, one, these things take time to implement, and two, you may get hit by a bus tomorrow. So we want to keep a close eye.
You also want to be prepared for that.
generally speaking, that's a good strategy. All right. So what else? Was there anything else that you wanted to talk about on the tax side, or do we want to talk about spending, or what What did I miss that you had burning questions on with this?
Well, the spending part is where I think people are more concerned. I think you answered the questions of it's not the taxes that are going to impact people. It's the spending cuts that are going to. And it's not that things are fully going away, but they will significantly change where there is going to be an impact on people.
Yeah, so I think one of the big ones is Medicaid.
Yeah.
This is another example of we've made this system so complex and so broken that now any changes to it seem catastrophic. Mm-hmm. Like if the government just got out of the business of health insurance, all of our rates would go down. Things would be more, and that health insurance is like the bane of my existence because we're going through our renewal right now, and it's so confusing and it's so complex and it's so overwhelming. And I objectively am above average intelligence, and I don't understand this stuff, nor do my agent who can actually explain this to me. I'm going to get solicited for a bunch of health insurance right now, but you know what? I'm here for it.
Yeah.
If you can explain this to me like I'm 5, I will buy health insurance from you. Anyway, so Medicaid, they are planning cuts to Medicaid, and there's a lot of people on Medicaid, like a lot of people, and they want to put some requirements in place that, if you're able-bodied, you should be working, and they want to check in more frequently on your eligibility for that. I personally think that's okay. Like if you're going to get free health insurance, which for I mean, we're spending 6 figures a year on health insurance right now. If you're getting it for free, there should be some requirements in place, and we should probably make sure that you're still eligible because it's pretty easy to sit around and just keep collecting. Yep. And if you genuinely need Medicaid, then you should have no problem. You shouldn't be too worried about the eligibility for it, right?
Yep.
Now, of course, they'll screw up the administration of that too. So they're saying by putting these work requirements in place and these qualifications in place, it's going to save, I think it was somewhere between $500 billion and $800 billion.
That's a lot.
It is, until you remember that we're 4.9 trillion short on the revenue side of things.
Yeah, true.
So it's kind of a drop in the bucket. It's a huge deal. It's catastrophic. Oh my gosh, what are we going to do? But it's also like not that much. So I think it's a shame that Doge is wrapping up so quickly. I haven't seen the results recently of anything that they've really done. We are seeing a lot of people exiting employment at the government right now. I've interviewed more IRS employees in the last 30 days, which we're still looking. If you know any former or soon to be former IRS employees who haven't completely drank the Kool-Aid, we're hiring. Send them our way. I'll pay you a referral fee. So we are seeing cuts. We are seeing changes, but I haven't seen the numbers on it. I doubt. My bet is these threatened cuts to Medicaid that would save, I think the most recent number I heard was $600 billion. I bet that's more significant than anything Doge has done. But I guess I haven't spent that much time looking at it. But that's the real issue here, is that the spending is so out of control. And it's like, if you're not paying attention, some of these things can seem like such great favors to you that the government has done something for you by reducing your taxes. The reality is they're just letting you keep more of the money that you already earn.
Yeah.
And oh, by the way, tariffs and inflation and monetary policy have made everything more expensive. So at the end of the day, it doesn't really make any difference. So there's so much fighting and argument and debate and news coverage over this. I mean, we'd spent an hour talking about it, when really at the end of the day, like, if you guys just got the heck out of it, all of this would be easier, it would be simpler, it would be less to worry about. So I think that's my real frustration here. And it goes back to what I said earlier about, there's probably, I'm sure Trump has even come up with a phrase for this, but I'm sure there's a phrase for like how fast he's moving right now, and how fast he's changing things and implementing things and then undoing them and tweeting about something, but then writing something different in an executive order and then going back and undoing it. I mean, it's wild how fast he's moving, and it's also wild how fast people are in a lot of cases just bending to his will on stuff. We talked about this. I think
people just want a change, though. They're like, you know what? Let's just see what happens. Because
everybody wants a change.
Yeah.
Everybody wants a change. For most people, this is not the change that they want. Most people, I believe, legitimately want smaller government and less interference in their lives and truly more freedom.
Yeah.
This is not more freedom. Right? This is them trying to give you back a couple $100 through the standard deduction and acting like it was a favor to you. And I think that's where a lot of people really just get distracted on this stuff, is they hear, oh, here go the Republicans passing tax cuts for the rich again. and the Democrats fighting it tooth and nail, and it's like, yeah, but really at the end of the day, what are we fighting over with this stuff?
Has it gotten worse over time? Like if you were back in the 40s and 50s,
well,
was it a lot different? I mean,
I don't know. I wasn't there.
What? No, but how much drastic? I mean, is it just something we're complaining about more, but it's always existed, or has there been significant change in the control they have?
I think that we like to think that we're living in unprecedented times.
Yeah.
But I think if you really step back in the grand scope of things, most of these things are not unprecedented.
Okay.
They're different and they're new or novel, but they're always variations of the same theme. So I there's part of me that says we've got to be more polarized now than we ever have been, more politicized. And that's the downside of a two-party system, is we tend to view it all as black and white when most people want gray or somewhere in the middle. Like I think America would I always thought that Trump was going to be the guy that would force the creation of that third party in America. And unfortunately, he's got his raving fans. I almost threw another adjective in there. He's got his raving fans who are so supportive of him. So then he creates this other side that's so anti him. But the reality is he's doing a lot of stuff that's very similar to what Joe Biden did. I'm going to go and say it right now.
Really?
Yeah. Biden put tariffs on Chinese steel and aluminum and stuff like that. And Biden said, China's going to pay for this. Like, I could take that same quote and put Donald Trump at the end of it and people would be cheering. And when Biden did it, if you were pro-Biden, he was saving America and he was fixing our economy. And if you were anti-Biden, he's an idiot and this is going to increase the cost of goods. Flip the script. Trump puts tariffs in place and says this is going to save our economy and China is going to pay for all of this. And if you're pro-Trump, you're saying, yeah, this is what we voted for. And if you're anti-Trump, you're saying, oh, this is horrible and this is the worst thing that's ever happened. They're cut from the same cloth, guys.
Yeah.
Like, let's look at the facts on this and what they're actually doing. There was another example outside of tariffs recently where I realized that they had done the same thing. And I don't remember what it was. It was in the last week or so, but it was like, holy crap, like they literally did the same exact things. But it just depends on what the spin is that they put behind it. And again, I think most Americans look at either of those scenarios and say, can you just stop?
Yeah.
But those of us who want it to stop are less vocal. I don't think less numerous, but less vocal than the people at the fringe saying, yeah, crank it up. Let's do more of this.
Yeah.
God,
I mean, at
it's
the end of the
exhausting.
day, do you believe all these tax cuts and things will actually, because the whole point, right, is to stimulate economic growth, right?
Well, it's to spend $175 billion on a wall and deportation forces. It's to spend $1 trillion in the Pentagon on endless wars. It's to, I think if most people understood, actually I just thought of another Doge example was with USAID. That was an organization that I didn't even realize existed. Like the hundreds of millions or billions of dollars that we just write checks to other countries and say, here you go. It's crazy.
Yeah.
And I think that's why Trump has support around that, is he's saying, we're going to stop this. Like, we're putting America first, which I think a lot of people agree with.
Yeah.
And if you disagree with that, I don't think you really understand the scope of how much we do for other countries.
How much is going out?
Yeah. When I was on a trip recently, I met a woman from Sweden and she had all these horrible things to say about Americans, right?
That's sweet.
She's like, you take a 2-week vacation and you think that's a sabbatical. That's not a sabbatical. You need 30 days off. And, Volvos are the best cars in the world. And there's Americans who believe that too.
Yeah.
They're wrong, but they believe that. So she's saying how horrible we are and how hard we work. And then the next part of the conversation was how unfair it was what Trump was doing to Sweden by eliminating foreign aid or putting tariffs in place. So it's like they'll take the benefits from us all day long. But as soon as we ask for anything in return, it's completely irrational and completely unreasonable. And that's the perspective coming from outside this country.
Yeah.
I think we have some of that inside this country too. There's people that get a lot of benefits from the government, whether you want to call them handouts or incentives or whatever it is, that the moment they're asked to do anything about it, it's a total uproar. So here's what I'm going to do. I'm going to stay in my lane. I'm going to focus on the stuff that actually matters to me and my clients and my family. and I'm going to do the best that I can on that.
Yeah.
And I just complained for the last 10 minutes, but I'm really going to minimize how much I'm complaining, and I'm going to focus on action, and I'm going to focus on controlling what I can control.
And what opportunities you can take advantage of.
I can control the opportunities I take advantage of. I can control the message that I convey, and I can control the success that I have regardless of what they do in Washington, D.C. And I'm going to wake up every single day and I'm going to do that. And I hope there are enough other people that follow me on that journey.
Preach.
Whew. That ended on a good note. I'm going to
good.
go shred all these news articles I printed. All right, great show, everybody. Keep an eye on what happens with this tax bill. We'll be here with more updates for you. Have a great week.
Current events.
I believe in you.